Good afternoon, everyone. JR with Secure Metals, bringing you your technical update here for both gold and silver. Today is the 3rd day of October, and it is 12:27 p.m. Eastern Standard Time. So, government shutdown, world is ending again. I mean, with this administration, I tell you, it's one issue after the other. And, at this point, we really just have to be cautious of what's going on in the market. This thing can technically go either way because who knows what these guys are up to. Who knows if they're going to pass a budget. I mean, they haven't passed the budget in over 7-8 years. I don't know why they would start now. But we fell below this level here. Let's look at the technicals. We fell below this level here, which was 50% fib level. Now, when we originally started this rally here, I think I mentioned that I didn't want the prices to go below this 38% fib level at 1336. Market continued to go lower, came down to the 50% fib level, came back up here after the announcement of we were going to continue to print. And literally there was absolutely no follow through. Prices came right back down into this symmetrical triangle. That was fairly bearish. We ended up finding a little bit more resistance here, and then we had a big move to the downside. I believe it was on Monday when we had the government shutdown. To everyone's surprise, you would think that a government shutdown will bring people to the safe haven, but everyone is scratching their heads. I'll put a video clip here of some of the talks that were happening on Monday in a few minutes. Just to show you how everyone really on Monday, everyone was just really scratching their heads, trying to figure out what the situation was. But as of now, it looks like we came down here pretty fast the day of the shutdown. Found some support here at 1277, which was the 61% fib level. Okay, while doing that, we also built a very scary formation here. I'll take off all these lines so we can have a clearer picture. But we really established a very ugly formation. This is when the prices go up, then prices come back down. Let's put prices. Prices come down, then prices come up again. Prices come down. Prices come back up, and prices come back down. Now you see this formation here. This formation is called a head and shoulders formation. You have your shoulder, you have your head, and you have your other shoulder here. So it's a head and shoulders formation. Now the head and shoulder formation technically is sort of a bearish formation, but it's only bearish when it completes. And you can also have an upside down head and shoulders, which obviously would be this, a big move in the middle, and then another shoulder going up. We have to be very aware of this line here, because where the shoulders meet, which is from here to there, I've already drawn that line. That's this line that you see here. Not this one that I have here, but this short one here. So yeah. Again, a move below this line on a head and shoulders formation. Let's look it up just so you guys have an idea of how this head and shoulders formation works. Head and shoulders. So this is your head and shoulders, and anytime you have this head and shoulder, again, when you fall below the neckline here, when you fall below the shoulders and the neck, you have an extension about the size of the head. So you have a move to the downside or to the upside if it's an upside down head and shoulders formation, an inverse head and shoulders formation. It would be the same thing on the upside. But again, just to give you a clear picture, I was kind of getting worried when I saw 1277 price. Because again, that could have been a very big to the downside. But also, when you also have these head and shoulders formations that are so obvious, a lot of times, believe it or not, even though they're technicals and even though everyone's trading them, but when they're so obvious, a lot of people tend to be cautious and they turn out to be false breakdowns, and you can have a move to the downside and then right back up. So again, this is a very, very, very scary formation here. But we did have a little bit of we were able to recoup some of our losses here and get out of this formation. As of now, again, still fall below 1277 could mean fall all the way down to at least 1170. I've actually drawn a line, and the extent would be probably roughly about this size, so you can come back down here and test this level around 1160. And again, that's if this bearish formation or this head and shoulders does play out. We come below this level here, don't find support here, which if it's going to be a fake breakdown, you would probably find some support here on the 1250 range, maybe even lower, maybe 1240 to 1250. If it's going to be fake, it'll come back up here and then it'll just go up higher. Of course, because it's a fake breakout, you'll see a big move to the upside. But point is that we have to be very careful of this formation here. This is a head and shoulders formation, and it could be fairly bearish. I think if that move does come about, I would hope that this is finally where the metals does find a bottom, and then we can continue with this really nice upward trend that we have here, which is very, very, very easily noticeable here in this chart. We're extremely bullish on this chart here. Again, this is really a correction through time, if you ask me. You have some sideways consolidation. The move to the downside from here to here is roughly the same from here to here. So again, I'm hoping that we're going to find some support here, worst case scenario, at around the 1240 to the 1260 zone. Hopefully that head and shoulders formation is a fake out. But again, with all the current fundamentals, government shutting down and the dollar getting weak, again, everyone is really just really scratching their heads, trying to figure out what's gonna happen here in the short term. My suggestion is every dip, if we do get the dip that's gonna be below this level here, I would probably just wait. Even if we see prices here back at 1250, I wouldn't buy. I wouldn't buy here at 1230 either. I would probably just wait for this to test this level here on the 1150. And I'm not saying that it's gonna happen. I'm just saying, again, we do have to keep in mind that this is a fairly bearish formation. But as of now, we can kind of say that this is still in a triangle here. Finding some resistance at this line and looking for some support here around the 1280, 1270. So on your gold chart, as of now, the prices are moving back up. Stochastics are starting to point up to the up again. Again, keep in mind also, when these head and shoulders formation do not come, when the actual price action doesn't come down before the under the neckline, that's also very bullish, and we can also see this formation breakdown, and we can see this thing test this upper band here around the 1440 range, 1450. Okay, so that's on the daily. Stochastics are starting to come back up, but again, a lot of choppy trading here. We saw a big move to the upside yesterday, and it looks like we're seeing some follow through today, but we have to wait and see. On the weekly chart, same as last time we visited, still under the 20-day moving average. Stochastics are still pointing a bit lower, again looking to change direction. On the silver chart here, I have something really nice that I want to point out. I think if you saw my last video or 2 videos ago, I mentioned that when silver and gold took off back in August and early August, I mentioned that there was a gap in price here. I'll put it up on the 4-hour chart so you can see it more clear. But when price gets away like that, you don't want to mess around too much. But again, here is where you saw this gap. There was a price gap, and as of Monday night, Sunday night, okay, we have cleared the gap. And I told you, I think I mentioned how I can't stand gaps, because again, gaps tend to fill. They don't always fill, but they tend to fill, and it looks like we did fill this gap. That could have been the correction that we were looking for, and once we fill this gap, this might continue to go up further. But as we can see here from this 4-hour chart here, we have this $22 barrier that we do want to cross. 100-day moving average, this line here, as well as this downtrend line here. between 20 and 22 and 22 and a quarter. So I think if we can surpass this 22 and a quarter, I think we can continue to go higher and retest the $24 range, possibly even higher, maybe the $25 and $26 range. So as of now, chart is looking good, especially on silver. Silver stochastics are pointing higher, but we do have the 50-day and the 20-day moving average, as well as this this line that's going to act as a resistance, and this trend line here coming down as well from this channel here. Okay, so I think once we can surpass 22 and a quarter, 22 and 35 cents, I think we'll have a good shot at taking out 24, ultimately coming back up here and testing this $25 range here, as well as this 100-day moving average. If we do manage to surpass this 22, I think it probably will be safe to say that we have found a floor, and we will probably not revisit these numbers anytime soon. Maybe ever. Who knows? Especially the way this country's going. There seems to be no direction. The only thing we can bet on is that the economy is not going to correct itself anytime soon, and it's really just a mess. And I think policy suggests, current monetary policy does suggest that we are still in an economic mess, and we really don't see any way out, at least as of now. Certainly, printing more money is not going to get us out of our debt issues. Okay, so that's your silver chart. Let's pull up your dollar chart and see if and check back on that bearish formation. The okay, and as of now, the dollar has seen a new low, 79.60. So again, I think like I said last time, it does look like this formation has finalized, and at this point is really just about just seeing if this market is going to continue to go lower, or if it's just going to dance around the 79 to the 80 range here for the next couple of weeks. Hopefully that'll give gold and silver a little bit of a push, the push that we need to get back up to the levels where we need to be, or we should have been, to be honest with you. So there's your dollar formation. It did hit the 80 target, like I stated. We do have, I think I also mentioned this on my last video here, another bearish formation. We've been seeing a lot of bearish formations. It's not a very common formation, but we have been seeing it. And I think I mentioned that this was a good time to start selling this. This was the GBP. This was the British pound versus the US dollar. If any one of you dabble with the Forex, like I said, 162.20 should have been a really nice entry. Right now, you should be up at 164. I would probably take profits. First zone, taking profits roughly around 160. But ultimately, this thing can come down all the way back down to, to these levels here and create a new low, maybe 147. It does seem hard for the dollar to gain so much traction against the British pound, especially with all the current. Especially with the current mess that we have in Washington. But ultimately, this is a technical formation, and if you want to be on the safe side, I would probably try to take it to 157. At least 157, we should see a move down to that. Or you can probably just take profits when you hit this 20-day moving average, because again, you should see a good move to the upside after you test this 20-day moving average, though the 20-day moving average is going up and the prices are going down. And the last thing I wanted to visit, of course, the Dow Jones. Last technical, I did mention that this was looking to test this line here. If you look at the 4-hour chart, it actually did test the line right here. We saw a test here back in, this was yesterday. It came from 1548 back all the way to 15135. And from here we found some more resistance at the 50-day percent fib level, and currently just under the 61% Fibonacci. So again, this line did not work. So the next target would be this line here. If this holds. But again, I do expect, like I've said before, you know, the Dow Jones technically should continue to go a bit higher, but I just see really no reason for anyone to gamble when something is trading at a high. You know, when you could be trading things like gold and silver, which are trading at lows. And you know, who's gonna buy here? What are you gonna buy here? I mean, again, you can make a short-term buy, you know, maybe somewhere around here, and probably take it back up to 15, 16. I don't think we won't. I think we'll definitely see the $16,000 mark, maybe a little under 16,000. Maybe 15.8, 15.9, maybe 16, maybe 16 and a half. But I think ultimately you're playing with your money if you have a big portion vested in this, because again, this is very clear that we are creating. It's very clear that we are creating lower lows, and higher highs. So again, we just have to wait and see what these politicians are going to do. And besides that, those are your technicals, guys. Before I go, I mentioned earlier that I was going to show a video. This is just a 2-minute video on Monday when the government shut down. I think everyone was trying to figure out what was happening with the gold market here. Santelli Exchange, if you like Rick Santelli. But anyway, here's the video.
But I'll ask you a more specific question. What do you think's going on with gold today?
Well, I think, you know, there's been a mixed bag with respect to gold. Do I rush to gold as a result of, you know, the dollar devaluation and the government's potential to print more money? But I think that for a portion of one's portfolio, regardless of what it does today or what it does tomorrow, Rick, I think that for a portion of your portfolio, you should own the precious metals for a hedge against where I think the dollar is going.
Kyle, thank you for being our guest today. A lot of questions. I don't know that anybody has the exact answers unless they could poll everybody that put on a trade in the last 48 hours. Carl, back to you.